and we will kick things off. All right, well, again, welcome to the webinar about high probability weekly option strategies. Now, for those of you who don't know who I am, I have basically been in the hedge fund industry for about 20 years now. I started my career working as a runner at the age of 19 on the floor of the Chicago Board of Trade. And then when I turned 21, I leased a seat for a few months and quickly realized that my real passions were with the quantitative financial models and indicators off the floor. And back in the late 80s, that was right around the time when those were fairly new. In fact, those of you who are familiar with TradeStation, they actually had a model or a platform called System Writer Plus, I believe, before TradeStation. And that was actually one of my first models that are platforms that I used. So that tells you how long I've been doing this. But it was an exciting time back in the late 80s. A lot of the things were very new. Literally when I would download my data every night, it would take about 30 minutes, it seemed like, to download open, high, low, close volume data for maybe 30 different futures markets. So, and you would be hoping at that point in time that nobody in the family picked up the phone because it was done over a modem. A lot has changed since then, fortunately. So now you can download the same amount of data literally in a fraction of a second. So things have gotten much better. But I'm mainly known for writing the book about dynamic trading indicators, about the value charts concept, which I developed in school as an engineering student in the early 90s. And I have been also an international speaker for technical analysis conferences and market analysis shows with Bloomberg and Traders Expo. And then I've also appeared as a commentator for CNN Money as well. So that's more or less my background. On a side note, I've always had an interest in options. I think options can be a fabulous tool for controlling risk, and they are extremely powerful. And if you take the time to understand options, they can be really offer a lot of upside potential. And especially with the introduction of weekly options, that's made things even more exciting. Now, as always, I want to make sure that everybody is aware that trading or investing carries a high level of risk, and it is not suitable for all people. I'd be more than happy to show this later on if anybody wants to see this disclaimer, but it's fairly much common sense. If you don't have money that if you have money that you cannot afford to lose, I would recommend not trading with that money. So understand that most people who trade lose money. Now, I'm not going to be showing any hypotheticals today, but I do want you to be aware that hypothetical results have limitations, even in the best scenarios. And anytime you look at hypothetical results, make sure you understand that those results come from a very defined period of testing. And as we all know, in the real world, there's no guarantee that we're likely to see the same conditions tomorrow that we tested over in the past. So that's in and of itself, it's a science. And in general, even for those who are very careful to try to create simulations that are as accurate as possible, they still contain a degree of uncertainty and a degree of error. Excuse me, I'm still recovering from my bike ride here. All right, so let's go ahead and dive in. When we talk about trading weekly options, we have a tremendous amount of potential to make money. And I'm going to focus really in this presentation on the final week leading up to expiration, so really the week of expiration. And the thing to remember here is that we want to enter trades at well-characterized or well-defined price setups or conditions. We want to be careful to do that. And if we can do that and find strategies that have that potential and that demonstrate strong upside potential and probability, then there are extremely attractive rewards for doing that. Now, the other thing is understand with options, there are a lot of things, a lot of aspects at play here in trading options that you would be well advised to know. So I always recommend do your homework even above and beyond anything you learn in these webinars. Understand the Greeks, understand time decay, understand how the premium prices are determined, and then also I would highly recommend that you study the charts of options to see how they trade with respect to the underlying stocks, because they give a lot of clues and a lot of warning signs as well that you absolutely must be aware of. Otherwise, you're going to find yourself in a bad situation. First and foremost, Let's talk about the time value versus profit potential, especially coming into the week of expiration. Now, as we approach the expiration Friday, you start to see time value really collapse that final week. So time value goes away. It goes without saying, as each hour and each day passes, there's less time for a market, the underlying market, to do something. We're going to talk about strategies, by the way, as well here at the end, but let me get through this. So understand that time value is aggressively working against us here in the final week of trading. So let me just draw around this period. So really between Monday and Friday close, this time value, you can see, takes a dramatic downturn. Okay, now for those of you who have been trading options, you know this. I'm just going over these concepts for those of you who are a little newer to this. But as that happens, there's an interesting, phenomenon or opinion out there that says that profit potential starts to increase as we get closer to the expiration day as well. So it's just one way of looking at it, but the reality is that there's a lot of different ways to trade the markets this final week, depending on what you're trying to do. If you're trying to day trade, and you be aware that approaching expiration day, you're going to see time decay really start to kick into gear. And so there's rules and best practices that we're going to review today that are going to keep you out of trouble, put you on the right side of the probabilities for success. That's what we'll try to do here, and make sure you're aware of pitfalls as well. It's really important that you understand that there are different pitfalls as well that must be avoided in trading options. Now, a quick call and put option review. Again, this is basic stuff. I'm going to go over this fairly quickly. Understand that the call option is simply a tool that you can use to define a level of risk. So your worst case scenario in a naked call is a defined level, the premium that you pay for the call option. And theoretically, the upside is unlimited. Okay, so that's what we understand about call options. And call options are used when you expect the price of the underlying to rise or to go up. Put options are the exact opposite. So you expect the market to go down. You have a defined level of risk, which is your premium, and your premium is made up with both time value and intrinsic value, which means that the time value has to deal with the probability of the underlying stock moving before expiration in a certain direction, and the intrinsic value is how much your strike price is already in the money. Okay, so those two are at play there, and again, as with the call option, if you're wrong and the market goes against you or goes up with a put option, you have a defined level of risk. Again, that's the price of the premium that you've paid, and then if you're right and the market goes down, theoretically you have an unlimited risk, a reward potential there. Now, in reality, we know it's limited because obviously expiration is coming, and the market can only move so far during the week of expiration. So that's the reality of that. Okay, let's see, bets on direction. Are you making bets on direction? Yes, we are making bets on direction. I'm going to go over that here in a minute. Now, let me talk about one more thing here. If you're trading and planning on holding a long position, a long option position, or a debit, well, I'll call it debit spread, you want to make sure that you take advantage of an instrument that can help you make up for the damage you're going to be incurring with time value collapse. Okay, so again, remember the last week of trading, we are looking at time value hurting us if we have a naked long position. So that time value starts to head down. The nice thing about using a vertical spread or a debit spread in those scenarios where you want to be long is that you're making up for that by shorting an option as well. So in this particular case, you're buying one option. This is a bull call spread, and then you're selling an option at the same time. And so that extra sell is helping you. You're recouping some of the time value that you're losing on the long option. So keep in mind that's a good way to trade. The bear put spread is the exact opposite profile as this. It'll have a limited upside, and then it'll have also a limited risk with it as well. So I'm going to draw this exact opposite here for the bear put spread. You get the message there. So I want to go into the more strategies and the nature of the options here. So let's talk about the explosive nature of weekly options. Now, if you plot the underlying, in this case we'll look at Apple, and then you plot a call option chart right next to it, you see the correlation here between the two. Okay, so understand that when the underlying heads up, let me change my color of my pointer here to something that's easily seen. When you see that the underlying actually starts heading up here, you expect to see the same thing happen with the call option as well. Now, it's not a one-to-one move, and that's where delta comes in. When you look at an option delta, that's going to show you how far the option is expected to move with respect to one unit of movement of the underlying. So if I have a delta of 0.5, then my call option is going to move half as much in the direction of the underlying. So if the underlying moves up 10 points, if I have a delta of 0.5, I'm expected to move up 5 points. Now the reality is that delta is always changing. So as it moves into the money or out of the money, my delta is either increasing or decreasing. Okay, but in general, we can expect to have the call option move in the same direction as the underlying. Now, why is this important to understand? This is important to understand because we can use the underlying for technical analysis. We can use different types of charts that are more difficult to use on an option chart. Now, the other thing to understand is that when you look at option brokers out there, let's just talk briefly about TradeStation here. My TradeStation charts, what they do is a broker has the option to receive streaming real-time option quotes, or they have the option to receive snapshots. Okay, now just so you can understand what's at stake here, there is massive amounts of option data out there, massive amounts. And you're talking literally, I believe you're well into the gigabytes for streaming very, very quickly in a matter of minutes. So what a lot of brokers opt to do is they will take a snapshot of options activity every 5 minutes. Instead of streaming that, my TradeStation chart right here takes a snapshot of all the options data every 5 minutes, and that data still ends up being a massive amount of information, believe it or not. So understand that. Now, if that's your broker, if that's what they're doing, or your price source, make sure you understand that because you're not receiving streaming data, okay? And that's very important to understand. So given that fact, you want to make sure that you understand the correlation between the underlying market, in this case it's Apple stock, versus the call option that we're looking at here. So that's very important to understand. TOS, or a lot of other brokers out there will have streaming available, and you want to make sure that you understand that whether your broker has streaming or they're getting a 5-minute snapshot, because that's going to make a difference on what quote, what prices are being traded at the current time you put in your trade. Now, the other thing I'm going to point out here, and I'm going to point this out again, is that you'll notice some spikes up here in my options chart, okay, down here. And we didn't really necessarily see the corresponding spike in prices up here in the underlying. So you want to be very careful when you're entering your trade not to enter market trades when you can help it. Now, in general, you're probably okay. This is a liquid contract, so in general, you're probably going to be fine. But there may be times when you're not, and you don't want to be a person who gets caught with a fill price on this option, call it above, maybe even above 2, and then have it all of a sudden go back down to $1, price level. So literally, you could have slippage in there if you're not careful with that really damages your profit potential and may actually lock you into a losing position. So be aware of that. So you have to understand. I recommend working your orders and putting limit orders a lot of times when you put option trades in. Work them. Understand the bid ask, and the bid ask the spread is going to change with in the money and out of the money options. So quite often when I'm entering a trade, I'm going to work that and hit the bid ask between the bid and an ask. I'm not going to pay the ask. I'm not going to sell at the bid. I'm going to put my order right between the two and work it. And more often than not, I do get filled there. So it may take a few minutes, but the flip side of it is that you risk, by doing that, you risk potentially losing out a little bit of the market moving in your favor. Now, let's take a look at this. This is a underlying chart here with the put option. displayed right below that. Now notice right here the underlying is going up again. For you seasoned option traders, this is common sense. You know this. I'm not going to spend a lot of time on this. But notice right here that the underlying is rallying. The price of Apple shares are rising. The price of my put options are falling because a put is a bet that the market's going to go down. So you make money on your put option when the market sells off. You lose money when the underlying rallies. So it's just the opposite of a call option. It's a bet, again, that the market is going to head down. So you'll notice, like initially, the put option started to go up when the underlying was falling off here. And that's that inverse correlation that it's important to understand as well. All right, let's go ahead and take a look at, I want to do a study here of the different strike prices for Apple and make sure that you understand the potential and the volatility here. This is really focusing in on the last day. We're going to look at the last several days and last day of trading here. Now, again, we know that the time value is collapsing near expiration, and really everything we're talking about here when trading these options is going to deal with timing. So a lot of the technical analysis that we use for everything else in determining the proposed or the direction of the market that we believe is going to happen going forward, those tools are still very valid, obviously, for trading options as well. What I would recommend doing is start first and foremost with the underlying chart. That's where you're going to have the best data and really the most information. So if I'm looking to trade an in-the-money option, this is actually a 490 call for Apple through yesterday. If I'm looking to trade that, then I'm going to use my analysis from Apple, maybe my 1-minute charts, my 5-minute charts, my tick charts, etc., on the Apple stock to help me time my entry and exit with options. Okay, but this points out the fact that there's a tremendous amount of volatility, especially on the last day of trading, with the call options here that are in the money. So you have prices as low as $4.50. And again, these option contracts are controlling 100 shares. You have prices as high as $11. All right, so that's a fairly substantial increase of about 200, or actually 200% increase. So from the $4.50. So it's approximately a little under that, maybe about 150% increase to 200. It's pretty close, but you see the profit potential there. So if you are effective at buying at a lower price, you can see that the premium value, the price of the options contract has a tremendous amount of potential here, especially on the day of expiration. All right, and so that's where you want to understand that. Now, notice right here, what's interesting is right in front of us here on this chart, we see a very nice bullish divergence forming on the momentum histogram. This is 0.2 right here. This is 0.1. These are the types of things we want to look for. I'm going to show you a cool setup using value bars and Bollinger Bands here at the end. But this is a huge clue right here that the market could be starting to find some strength. When I see this, one thing you may want to look at is the first bar, histogram bar, that actually starts to turn around and rise. In fact, this one right here did it very subtly right here, which would be this bar right here. You may want to look to be a buyer there if you're looking to buy and you want that timing element. So the setup is established by the bullish divergence here, but the timing element of that is often something where you may want to take a look at the actual histogram bars moving higher. Okay, now if you don't have MQ momentum, this is my momentum indicator of choice. This works as well on MACD, so I'd recommend checking out the MACD as well. Make sure you have one that has a histogram bar. Bars in the middle, because some MACDs don't. Is it better to take positions of 5? Okay, the 5 Monday for day trades. Pete, I'm sorry, I didn't quite understand what you're asking. Is it better to take positions of the 5? Yeah. Let me just talk about my day trading rules. I'm going to go over this here in a second. So yeah, Richard, thank you. 244% increase. That's what we see here. I'm going to go over my trading rules in a second. So hold the questions just for a minute. I will get to them. I do want to take a look at a series of options here. Now, we were looking at a 490 call option, which was in the money because Apple closed, I think, right around 502, if I'm not mistaken, for Friday. In fact, let me pull up my Apple chart here and tell you exactly. It closed at, right around $500 a share. So, excuse me. So this means that this is about $10 a share. The previous one was about $10 per share in the money, all right? So it had a nice in the money component there. This is the 495 call, so we're looking at a less in the money call, and you can see right now that this has a little bit more of a profit potential here during the last trading day. I want you to see this. So again, this is over, instead of 244%, thanks again for the calculation there, this is over 300%, right? So this, as we get from more in the money to closer to at the money, then you start to see it's 520. Thank you, Richard. 520% increase right here. You see the profit potential increases as well. And the nice thing, again, we're talking about trading naked call options here. The nice thing about this situation is that we're limited to the amount of risk we have here. Now again, with the same thing we just pointed out in the previous slide here, we're using our best practices technical analysis. We see price falling down here, and we see the momentum histogram rising. You'll see the same thing in MACD. This is a very nice bullish divergence. Again, first histogram bar that's up. You're looking to be possibly use that as a timing element if you're looking to be a buyer. All right. Now, again, this is a situation we're going to go over where you could consider getting out and things like that here in a minute. But notice again, as we're getting more at the money, so less in the money, we have more profit potential here. Let's go to the next one. This is 497 call. All right, so now on this one, we should have, let's see, what is that? Is that 700% increase? Richard, you'll know that probably faster than I will. But we're getting closer to at the money here, right, on expiration day. And these are fairly liquid for this market. Now, what is this indicator called again? The indicator that I'm looking at for momentum is called MQ Momentum. It's one of our proprietary indicators at valuecharts.com. But something that you can find on every platform is MACD. So MACD is a very nice and very powerful divergence indicator as well. The indicator on the top, you see my price bars are colored. This is what we call value bars. It's one of the value charts tools that we have at valuecharts.com. But right now we're not talking about that yet. We're just talking about the bullish and bearish divergence. All right, so notice 800 in total, 700% increase. Thank you, Richard. So this is a much larger increase. Now notice, again, remember that at the 400 call option, we were $10 a share in the money. We had a 244% potential increase. Now we're looking at a 700% increase. All right, you see how that's working? As we get closer to at the money, we have more profit potential here on the trades. Now let's look at the at the money where the market closed. Apple Computer closed right at, I think, $500.50 a share on Friday. You now see, interestingly enough, 18 cents on the low side, right? And this is 510. This is pretty close to 1,000% increase here. I think it's 900 change. I'm guessing, doing it in my head. But this is right at the money, and we're seeing quite a potential increase from low to high here. Okay, in the chart. And again, what's nice about this here, I'm just scanning this options chart. What I like about this, yes, this is being recorded, George, by the way. What I like about this is that I'm not seeing those crazy outlier bars here where somebody got really screwed, and excuse my language there, I'm not trying to use bad language, but somebody got screwed on their fill, which means that, I'll show you here in a minute a couple examples of that, but that's nice. I want to see my option contract trading normally. I don't like to see options contracts do crazy things throughout the trading day, because what that means is that somebody out there has put in an order and they got a horrible fill, and sometimes it's just a matter of somebody unloading or buying a large position when that happens. But oftentimes the small trader can get caught up in the mix there. Okay, options was at 18 cents a share. Price is Apple. Yeah, the price of Apple, Brad, at the time of that was early in the day. I'll tell you exactly. Early on in the day on Friday, Apple actually opened at $4.95. So traded really between $4.95 and $500 a share. Okay, and that was on Friday. So it gives you a little perspective here. So we see that Apple, which is interesting here, this is at the money. We see Apple rising about $5 a share. But what's interesting here is that by the course of the end of the day, our option as time goes by, we see the time decay starting to really beat up in our at-the-money option here. So even though you see a nice $5 share run, this really gets us right to at-the-money on this option. We're not really experiencing that upside quite as much. We do temporarily, but this is why you need to be very, very careful trading at the money or out of the money call options close to expiration, because you don't have that long to take your profits and run. Volatility crush, and theta crush, time decay crush, especially will start to eat your lunch. So be wary of that. Be careful. Now, having said that, this is why it's important if you're trading at the money calls or at the money puts, you want to be darn sure that you have a very, very defined exit strategy. One for the best case scenario, one for the worst case scenario, and one maybe for the in between. So you want to make sure that you are out of your position in advance of the close. You'll notice here that the prices, let me just circle this, right over here around, call it 1:30 in the afternoon, this is central, by the way, they start to, price of the option starts to really tank here. And I'll throw up the, if you look at the price of Apple here, it didn't do a lot here. So it really kind of almost traded sideways for the better part of the afternoon. But this is where you start getting crushed in the time value. So make darn sure if you're trading at the money options, make sure you understand time decay is your enemy. It's going to start beating you up. If you have a spike up in prices, if you have that opportunity to get out, timing is everything. So you have to have your finger on the trigger. You don't want to be trading this on expiration day and walk out to make yourself a ham sandwich in the kitchen and come back because your opportunity to get out of the market may have passed by that time. All right, so let's take a look at another one here. This is actually an out-of-the-money call. Okay, now what does out of the money, in the money, and at the money mean? This all relates to where your strike price is compared to where the price of the stock is. So we know the stock for Apple closed at right around $500 a share. This is at 502. That's where my strike price is. Because this is a call option, Apple did not close, the underlying stock did not close above this price. So this is going to expire worthless right at the close of the session. So understand, if you're trading out of the money, this is now an out of the money call option, you need to run with your profits. Now, notice here also, see these spikes, these bars, 5-minute bars that are spiking up, especially this one right here? Be careful. Be very, very careful. This is where you need to manage your trades, and I recommend, as much as, this is me, I recommend using limit orders. Look at the difference here. You're talking about $1.50 on the high side of this one bar, and then literally it comes back down to 50 cents. So within 5 minutes, just because of slippage here, the market has done nothing, the stock price has done nothing, you are going to get hammered on this and potentially pay a lot of money if you're not careful for an option and have no chance whatsoever to recoup that. So you're dealing with a loss at this point, and you don't want to be in that situation. So I would recommend watching this and really keeping an eye on this and using limit orders. And again, watch the bid and ask spread too as you get farther out of the money, because those spreads are going to tend to increase, and you're going to want to try to work those. You don't want to pay the asking price. In general, if you're out of the money, you want to work those spreads. And I would highly recommend taking time to study that. Talk to other options traders. Talk to Dave Aquino. I mean, he's great at this stuff. He's our options live trading or manager, and he'll tell you, other option traders will tell you in books and whatnot, they're going to tell you what to be aware of. So it's almost a cautionary tale. It's almost like saying you can go out and play in this field, but be careful. There's a mine shaft out there. You don't want to fall in that. That's what option trading is like. You don't want to fall in the mine shaft. Okay. Good question here. Wouldn't you want to sell on that spike? You probably would not have the option to do that. A lot of times these will spike up and be down before you know it. A lot of times that's not the natural trading that takes place. Let me give you an example of that. About 2 or 3 weeks ago, the gold market was hammered by an algorithm that came in and just destroyed gold prices to the tune of about $35 an ounce. If you were trading, you and I trading that, we would have gotten murdered on that. Okay, we had no chance to buy gold when it was down $35 an ounce. It literally recovered. It crashed in a second and recovered in maybe a second or two. So realistically, we're not going to be taking advantage of that. Now, you need to be aware that There are hedge funds out there that are working on chips now. They're even going around the hard drive. So forget about the C drive. They're working on chips that are designed to integrate. They're integrating their trading strategies on chips, and they're co-locating their chips on near the exchange's servers. So you and I have no chance whatsoever to compete with those folks. So now, in theory, you'd say, okay, it'd be great to sell this spike up here. In actuality, we have no chance to sell that up there, really. I mean, now I say that. Now, the only exception to that is if you have a limit sell order up here that somehow is way up here, you might have a chance to get filled there. I guess they'd have to fill you before they filled somebody else. But be careful with that as well. So in reality, just day in and day out trading, we can't compete with the algorithms out there that have these chips that are co-located next to the exchange. And literally, so you understand how fast the science is actually moving, these chips, these companies that are making these chips they're actually obsolete in a matter of months. That's how fast this technology has been moving with these algorithms and co-locating strategies. They literally will almost are obsolete or old-fashioned in a matter of 6 months. So we can't compete with that. But do understand, these spikes can happen. If you put in a market order, you don't want to be paying $1, called $1.20, and then have your option price go back down below 20 cents. I mean, you're just getting murdered. You'd be upside down by $1 a share here. So watch out for that. Now, let's take a look at the movement here of the out of the money. Realistically, okay, not the spikes, because we really don't have the opportunity in general to profit from those. But in and day out trading, we're looking at a low of around 7 cents and a high of around 23. So about a 200% profit potential here with out of the money options. Now, so when you're trading the day of expiration or approaching expiration, I recommend trading at the money or in the money options. Okay, that's where you're going to get your greatest bang for your buck. Okay, let's go back just quickly here. Remember what I showed you on the previous screen. We talked about the profit potential being, with the at the money around 1,000% and 700% for the 497 in the monies, right? Or I think it was 800%, or 700% increase. So understand you're in the money, slightly in the money, and at the monies have more profit potential right as you approach expiration than the out of the money. Now, those of you who are out there will say, well, Mark, what if the stock rallies and saves me? Well, if that happens, then you can make a lot of money with out of the money call options. But in general, you have to understand there are market forces out there that are really managing the close of the stock price as we get close to expiration. So don't think it doesn't happen, because it does. All right, a lot of people out there are managing the stock price. I don't want to say manipulating it, but they've got a level of motivation to make sure that the stock of Apple doesn't all of a sudden spike up $10 a share in the last 10 minutes of trading. All right, so I don't see that happening very often. If you're trading out of the money options, you better be sure you understand the volatility of the market. And I would say 80, 90% of the time you will not be rescued. You're going to end up with something worthless, especially if you hold it into closing. And then the other thing to understand here is that you're going to start getting murdered on time value with out of the money call options. I mean, right here it goes up to 60 cents, and then that's literally in a matter of 15, 20 minutes, you're almost down to zero. All right, so you've got to manage this. I would not recommend holding out of the money calls really past noon, okay, or 1 o'clock. Understand, you're going to start getting murdered on that. Yeah, so anyways, I'll get to questions here in a minute. So let me just let me get through the remaining content here. Now, for the put option side of the equation, remember we talked about that. Put options are betting that the market's going to head lower. So going into expiration, this is actually an in-the-money put option. This is above the closing price of $500 a share. This is a 505 put. So this has an intrinsic value. All right, so we can see that there's a lot of movement here going if we would have sold this from a high price of $11.50 down to $3.80. So we'd essentially be able to capture about $8 of profit here in the best case scenario. Now, again, I like the fact that this put option is trading fairly reasonably. We don't see those crazy spike ups, where we as private traders can really get murdered on the slippage. But so this is, I like that. For a person who's betting that the market can go down, this is not a bad instrument to trade. At the money or in the money, slightly in the money put option, certainly worth looking at. All right, for naked option trading on kind of at expiration strategies. This is the 502.50, getting a little closer here. We see this is also in the money. So 880 was the top price up here, going all the way down to 157, gives ourselves about $7 a share potential. This is not, when you sell this, you're not able to take advantage of the leverage, that you can for the call option, the buying side. So if you're thinking the market's going to go up and you want to see an option increase by 500%, you're not going to get that kind of bang for your buck by selling an option strategy is in the money. It's going to be buying an option strategy in the money or at the money that allows you to do that. So just understand that. But this one closes again as we get closer to the expiration. This one you see closes or falls quite a bit. Part of this is due to the fact that that Apple rallied $5 a share near the from open to close of the session. But so you see $5 of that loss right here is due to the fact that Apple stock rallied, and then you get a little bit more time decay built into that. All right, let's look at the at-the-money 500 puts here. Again, it's going from 6.55 to 32 cents. I think Apple, again, closed at, I say 32 cents. It actually went down to 50, wherever it closed at. So this is a 500 put. This is actually ending up at zero because it closed above $500 a share. Right, so this actually does go to zero. So low is not 32, but it gets close to that near the close. Understand, if you're right at the money, be very, very careful. Look for your profit targets, and take advantage when you have those openings. This is a 495 put. This is a great example again of why you want to use limit orders. People are getting murdered here on this slippage. If you put if you put a market order here to buy this put, you risk buying it for $1 and then it literally going down to 10 cents. So don't do that. That's just throwing away money. And if you get caught in one of these spikes, you have no chance 99% of the time to make money. It's all a matter of damage control at that point in time. So understand, out of the money options, calls and puts are vulnerable to those slippage spikes that can be very damaging. Now let's look at a longer term view here of options. Okay, this is a 495 put. This is an out of the money. It ends up being an out of the money barely, or I guess it wasn't at the beginning of Friday, but it ends up being out of the money by the end of Friday. Put option. And notice that we have a lot of these slippage spikes here. This is what I'd encourage everybody to do. Go study your charts and look at these. Coming in the week of closing, look at these spikes here. These are all cautionary. These are mine shafts that you could fall down and really be damaging to your P&L. And even going into closing, we have how many of these things? It looks like 8 of them almost. So be careful of these spikes. They're a huge warning sign. Now, in general, let's look at the profit potential. So we have on the low side about 42 cents, on the high side about $3.85 for our contract. So we do have a lot of potential here. This rally from 42 cents, if we were timing it well and we caught the low here, we could see a rally to 250. So that's about a 400% increase right there in a matter of literally, an hour. So tremendous upside potential here. Another thing you could use to your advantage is limit orders and leave them out there. If you bought down here, okay, just say for argument's sake you bought right around 50 cents a contract, okay, you could conceivably leave an exit order out for $1.50. And there, if it hits that, you get a slippage spike, you might be lucky enough to actually get out at that point in time at $1.50 a share. All right. Let's see. Yes. So, well, if you bought 100 shares or $500 a share, yeah. So each contract, each options contract is 100 shares, right? So if you bought 500 shares and you made of this at, I can pull up my calculator here. 500 shares of this, it's 100 shares per, right? So it's $4.20 per option, okay? And then multiplying that by 500 is what, a couple thousand? I don't think it's so it's 500. Yeah, it's $500. So you would be looking at about, I think, 1,000. Is that right? $1,000 of profit potential there. If you sell it with a $2 increase. If my math, excuse me, it's a Saturday morning, my brain's a little fuzzy here, but I'll pull out the calculator here in a second. But there's a lot of profit potential here, no doubt about it. And again, we want to trade stocks that have liquid stocks only. We don't want to mess with stocks that are not liquid because you can't win with that, honestly. Day in and day out, it's hard to do it. You have to literally manage your bid and ask. You have to work every order, and if the liquidity is not there, you're going to get murdered on your fill, especially when you have to exit. We're not interested, by the way, in holding our options to expiration. All right, unless it literally, you don't have any value in it. If in general you want to get out of your positions before expiration, regardless, you don't want to take delivery or go into exercising, or in general you want to try to recoup as much as your out of the money premium as you can. Now let's just take a quick look at this too. You can see right here, if you recall, the earnings of Apple destroyed Apple stock value here not too long ago on the 28th. Okay, for those of you who are watching Apple. Now, what's interesting here is that you think, okay, if I would have bought tons of shares, right, of the 500 puts, then I would have had the potential to make a ton of money here, right? That's the thinking. You could have bought them for maybe 64 cents, call it, per share before the earnings announcement. This happens very rarely too. In general, if you're buying, you better really study the volatility and the volatility premium of a stock before the earnings report, because in general you want to understand that in general it's a losing proposition to buy naked longs and puts in general. Now this is an exception where Apple literally gets crushed to the tune of $50 a share right at gapping down the next morning. So that's a little bit of an exception there. But what's interesting here is the strategy. If I would have bought the 500 puts here, now you do have this thing rally up here to a potential of $6 a share. So you do have a potential to make, call it around 1,050% profit, which isn't bad. Okay, that's not bad at all. But look how fast that falls off here. So you're up to literally $6 an option contract, and within an hour you're right back down to $2.50. So you see how fast that falls down. If you trade earnings, if you're doing it from the long side of the option strategy, you better have your timing down to the minute, okay, with your options, because your window, you literally had a 5-minute window to capture the top prices there on that for that particular morning, and take advantage of that. Now, as prices tended to drift down and get our put option in the money, that's what we're really hoping for. And that's where we get more of a sustained, intrinsic profit there that's more reliable than just the time value or the volatility impact of the movement. Now, here's just a comparison. If we bought call it the 45 puts, they're a heck of a lot more expensive. I mean, they're literally $10.50 an options contract, but we would have made about, call it, 300% profit. It doesn't compare to 1,000 now, but if you go back and look at your charts, those 1,000% surprises are extremely rare. So they don't happen very often. I would not count on those at all. The more likely play, if you're expecting a reasonable move, could be something that puts you into intrinsic value, and to take advantage of it. That's how I tend to do it, okay? Because if you take the out of the money strategies, you're too far out, the wing nuts, they call them, then 99+% are going to end up with something that's totally worthless. Let's look at the weekly option trading strategies, and let's go into questions here. Now, options contracts are 100 shares. All right, so just understand that, pretty basic stuff here. You want to work your orders for the best fills when you're trading, especially as you get closer to the expiration. You want to work your orders. You do not want to get caught in a slippage spike. Market orders are risky. Understand that. Now, a lot of times they can work in a liquid option, especially if you put them into an Apple option or Google or options for the highly liquid stocks. They tend to, on average, are probably okay, especially when you're dealing with at the money or in the money options. Okay, but if you're dealing with out of the money options, you're playing with fire more. So study your charts. Make sure you understand that slippage spikes will murder you if you're dealing with market orders. Maybe not most of the time, but that one time they do, you're going to have a losing trade that has no upside potential. Avoid holding naked long options, okay, the week of expiration. Don't come in general and say, okay, I'm going to swing trade this week, and I'm going to buy a call option because I think the prices are going up. You're going to get murdered on the time value. In general, that's not a good strategy to take a look at. So again, remember, the last week of options trading, you're going to get murdered in time value. Only trade options on highly liquid stocks. Don't play around with the other one. This is my personal recommendation. If you want to do it, you'll do it at your own risk. But I even talking to seasoned option traders, much more seasoned than myself, they all say the same thing. Don't do that. Consider long naked option strategies for day trades. We saw those. We saw how you can trade, just naked put and call strategies, and you had a lot of profit potential. You can certainly day trade those, and there's a lot of potential profits to be made there. A lot of people don't like to trade in the long side. Okay, I don't mind doing that. I don't mind trading the long side of the options. You have to manage that, and I would not recommend holding naked long options overnight in general, okay, because you can get murdered on your time value. Understand risks of option trading. Now, if you're new to option trading, you need to make sure you do the minimum amount of homework. The more skill you get, the more that's going to help you in your endeavor to be profitable. If that's what you're actually after is being profitable, then you cannot replace skill and experience. You just need to put the time in. Get out of options before expiration. You don't want to deal with delivery and, in general. If you have an option that's expiring worthless and you can't get out with any value at all, then you can't help that. But in general, you want to exercise or get out of your options before exercising. Now, weekly options trading. If you're holding a long position for several days, I would recommend using the vertical spreads, the debit spreads, like a bull, call, or bear put option spread. Those can be useful, right? They can work, and they can work out very well under certain circumstances. Now, with everything we're saying here, we're making the assumption that we're going to have the power to time our trades. For naked long options, I recommend trading at the money or in the money options. Okay, that's for put or call. So at the money or in the money for a call option would be at the current stock price or having a strike price that's lower. So for Apple at $500 a share, I'm looking to trade $500 a share, a 500 strike price, $497.50, $495. You get it, $492.50. That's what I'm looking at for the naked long positions. On the put side, I'm looking at trading $500 or 500 strikes, $502.50, $505, etc. So that's what I'm looking at. I tend to stay away from, unless I really feel like there's a strong chance that an out of the money could become in the money, I'm staying away from those in general. All right. Credit spreads can be considered. And by the way, let me just touch on one final point here. I stay away from the out of the monies because there are forces out there that are going to try hard not to let your option expire with intrinsic value. All right. I'm not a conspiracist. I'm just telling you that there's very large companies out there that may have massive option holdings, and they don't want your option to be worth anything that's out of the money. And there may be trading that happens that keeps your option from your strike price from ever being profitable. All right. Let's see. Now, credit spreads can be considered primarily for capturing collapsing time. You could use a credit spread by selling a bull, call, or bear put option. They can be very, very effective for doing that. I don't recommend, this is me personally, I do not recommend you sell options naked. I don't recommend that, okay? Let me tell you a story. There was a hedge fund manager many years ago. This guy set the world on fire for year after year after year, and then he got destroyed in 1 month. All right, and every time I see that, I see these great option traders who are selling these naked calls, selling naked puts, and all it takes is that 1, 3, or 5 standard deviation day. It's the 9/11 terrorist attack, whatever. You've just given away a year of profits, or you've just killed your account. All right, so that's why I don't consider doing it. For the average trader, I do not consider you sell naked options. All right, you can do credit spreads. You can do other things or other tools where you can define your risk. But don't do it with just a naked option. I don't recommend that. You may get away with it for a while, but eventually it's going to be time to pay the bear. Let me just a second here. Let me get this back up here. All right, so let's get back to this. Can everybody see these the red snapback setup? Okay, I'm going to get to this in a second. I know there's a lot of questions here. Can you all see this? Okay, the slide. All right, good. All right, now here's the red snapback setup. This is interesting. This is actually a trading strategy that somebody else was sitting with me at a Traders Expo and said, "Hey, what if you looked at this with Bollinger Bands?" I said, "Okay, it's interesting." Bollinger Bands are not the same as value charts, by the way. For those of you who say they're the same, they're very different tools. There's some common overlap in terms of what they're trying to do. Bollinger Bands are designed to identify high and low prices with respect to recent history. Go to johnbollinger.com, and he states that as what they're designed to do. And I think they can be very complementary to value charts. But in this case, I'm going to show you a value bar strategy that you can use with this. Now, if you don't have value bars, you might be able to use something else like maybe a stochastic or an RSI type strategy. There's nothing out there that I know of that's exactly like value bars. That's why I'm saying value bars. There's not a replacement. Like for my MQ momentum indicator, you can use an MACD, and that can be a suitable replacement. I do not know of a suitable replacement for value bars, so just to be transparent about that. Now, the red snapback strategy, what we're looking for, I want to see prices under the lower Bollinger Band for a buy setup, and I want to see value charts significantly undervalued. Okay, I want to see these two things happening together. I'm going to show you a chart here in a minute. If it's a gap move that causes that, be careful, especially an opening gap move. Then you want to require a bullish divergence with supporting momentum. You don't want to just blindly take trades if it's a gap move, especially on the open. The sell setup is just the opposite. Selling, I want to look for prices over the upper Bollinger Band, and I want to look for value bars significantly overvalued. Now, for those of you who don't understand value charts or you don't have experience with it, value charts, when they're significantly overvalued, or value bars, that means that represents the upper 2% of market valuation. If they're significantly undervalued, that's the lower 2% of market valuation. So that's extreme. And then combining that with Bollinger, it just adds that. Now, the settings I use for value bars, I use the 35 bar look back period. I'm using 35. I use standard Bollinger Band settings. I'm using 2 standard deviation lines. I'm using 35 and 0.2 for those of you who have this tool. All right, let's take a look at it. Now, again, remember the rule that says on an open gap, if I come down and I qualify, I'm not looking to do anything. Let me get back to blue here in color. Okay, so this area right here, I'm not a buyer there, especially with a gap in the open, because we need the market to figure itself out and sort itself out. That's a little risky right there, so ignore that. Force the market to give you a bullish divergence usually. See how we have lower prices there. This is point number 1. Here's point number 2. Down here, look at point number 1 in your histogram and point number 2. See how that really is starting to strengthen there? That can be something you can use here. And then once you get an upward turning histogram bar, you could use that as your entry signal. And then what you could do, one exit routine could be either a value target. Notice right here we have the equal and opposite situation. Now here's what's interesting about this. Notice how prices right here are starting to get above Bollinger Bands, right? But that doesn't qualify because we don't have significantly overvalued prices. So we want both of those. Now we can enter a short position right here. Notice how we have significantly overvalued upper red bar that happens to also be above the Bollinger Band. We're looking to, we have both conditions true. It's not a gap, it's not an opening, phenomenon. We could potentially sell this. If you sell this, if you're entering your trade here, you're going to want to see your trade go in your direction pretty much right out of the gate. And you don't want it to go in the direction. Here's what you have to avoid. You don't want it to go in your direction and then go back above where you got in. So at the worst case scenario, put a break-even stop in there. Once it does go your direction, you can use the middle Bollinger Band here as a target for part or all of your position, or you can use the lower Bollinger Band. So if you got in down here using this kind of setup, now this is probably this is a little bit of a deviation from this type of setup, again, because we have the gap open. If you use this, you could use either the center or the upper. In this case, the center Bollinger Band is not offering a lot of upside potential here. The upper one offers a little more. You're probably making, call it 100% maybe on that, close to that, I think. Yeah. So that could be a profit target. If you hold on to this, if you enter in a case like this and right at 2, you're going to want to make sure you're out if you get significantly overvalued prices on the 35 bar value bars. You're out. I mean, that's, in my opinion, you're not going to really do better than that most of the time. That you say thank you, accept that gift. You just made 300% on your trade in an hour and a half. You're done. Okay, let's look at this next one. Again, I'll answer questions here momentarily. You can enter on the short side here. This meets the short selling criteria. Now, if you don't get out the center band, if it hits the center Bollinger Band, you want your stop to be at break even. So wherever you end up getting in up here, you want your stop to be break even. You'd probably be stopped out if you didn't end up exiting your trade, but you have another one of these right here as well. All right. Now, where do you put your stop on that? This one didn't immediately go in our direction. It stalled for a second, and then it went in our direction. You want to be careful about this. This is a trade that you do want to go in your direction probably in the next 3 to 5 bars. If it doesn't, that could be a little bit of a warning sign. And especially when you get it to go down, it fails to reach the center band right here, and it bounces right back up, you may want to go ahead and get out of that. You probably can get out at break even. in that case. You should be able to get out with some profits here in the second scenario. Let's look at another one here with Google, then I'll answer questions. Here's a great one. This is where if you're holding on for something a little longer, let's say your dailies are telling you that, that Google prices are vulnerable to sell-off, and then you happen to have this setup right here where you have the significantly overvalued value bars, and then you also have the Bollinger Bands. You have both of this, and this qualifies for that red snapback. This is where, if you want to, you can use another discipline, a longer-term discipline to get you out, or exit criteria. Certainly, you ought to be out right here with the strengthening momentum, I would think. Right here, it's a little bit of a red flag. Now, notice we have a gap down here. Okay, that invalidates this right away because the market needs to sort itself out. And those signals, in my experience, you don't want to get right in with those. You want it more or less to be something that's a continuation of trading previously. You don't want the gap open to create this condition. Okay, Dave always uses regular Apple bar charts. This chart, option pricing. Robert, that's a really good question. No, I would recommend, that's a really good question you say here. You can use regular Apple bar charts. Okay, in fact, I would absolutely tell you to look at the underlying. That ought to be your primary tool. I'm just looking at tools off of option pricing as well, but you can use all the same setups with the actual underlying stock, and it's equally if not more valid. I'm just focusing on option charts because we really don't have time to spend a lot of different both underlying and option charts. But I want people to see, especially with the slippage spikes, what happens with the behavior of option charts. So yeah, Robert, your point's well taken. You want to use your chart of your underlying for this. So that's absolutely true. Now, this is an interesting tool that's very, very simple for timing. Let me see if I have any questions, by the way. I'll come back to the red snapback questions if we have any. These are, I don't know if this is pronounced CAGI or CAGI. I've heard it pronounced both ways, but these are an interesting type of chart for timing as well. If you have a good setup, the theory behind this is that you could buy when you have this green noodle start, if you will, and then get out if you get a red one. All right, and then you can get back in with a green, hold on to it if you get the run up, and then eventually get out if you get red. So these could be interesting. They don't take time into consideration. And the other thing you've got to be careful about with these charts is they do not account for gaps. All right, so if you have a thinly traded option, this makes it look like it's smooth sailing and trading smoothly at all prices from the buy signal to the sell signal. That is not the case. Be careful with that, especially with any type of logic that's not based on time at all. All right, so right here, this big sell-off, that was a gap. So understand that those can be gaps. But for those of you who want a very simple way to get in and out, this could be something to look at. I haven't done a lot of study myself on this, so this is not something I would do, all the time. I would absolutely not do this all the time. I would only use something like this if you have a very strong setup and you feel very strongly due to your analysis of the underlying stock or something that the market's going to head in a certain direction. And this can be a useful tool to capture, to keep you in, of the move if it ends up going your direction. So just one idea here. Now you can see right here as you get into the choppy areas, you can get chopped up in this as well. So be careful with that. You want to see it move in your direction when you're using this, which is not a bad idea. So I've been asked, Mark, what about Renko charts? Can you use Renko charts for timing? Now, be careful. Look at all the gaps right here in my chart. This is looking at Google. This is 1160 call option and a 5-minute updates, as TradeStation does this. But look at how choppy and gappy this chart is. And now look at your Renko. Your Renko does not reflect that. All right, so you think that you have all these opportunities to buy and sell all the way down and all the way up. You don't. All right, so it's a little deceptive about what you can do in terms of timing. Now, can it be used for it? It might be. You might be able to actually use this for it. All right, but I would play around with both CAGI charts and Renko. You can set the reversal bars at 0.25, 0.5, 1, and 1.5 and 2. Those are the ranges that I would test those at. What do I mean by that? That's probably a topic for a different day, but if you open up those charts in your trading platform, you're going to see what I'm talking about. Parabolic breakout with SAR. This is an interesting strategy as well. If you have a breakout, let's say you're bullish down here at the bottom, again, of the option or the underlying, then you could have a very simple breakout strategy where you're buying the highest high of the previous 3 to 5 bars for a buy signal. And for your exit, you could use either the stop, the equal and opposite breakout of maybe a little longer time period. So you want to bias your parameters to buy more quickly than you sell. And then the parabolic SAR can be a very effective tool as well. So once that kind of chases the market up through the acceleration component of the parabolic SAR, you can be out once it changes back over or flips over. So you can check that out. But again, if you're not seeing the volatility in the market movement here, the parabolic SAR will chop you up. This is basically not something I trade over and over again. Again, look for the quality setups like the red snapback or bullish divergence, or all the ones we covered in the recent setup class that we had. Those are very powerful, and then you can use this as a quick intraday exit just to take your profits and run. Remember, we want out before expiration, and when we're trading, especially this close to expiration, we want to take our profits and run. All right? Yeah, SAR is also helpful showing, Todd, you're right, a previous buy and sell points. Yep. Chart examples. All right, let's take a look at this. Let me just go into one quick thing here. I'm going to jump into chart examples. For all of you who were at the VIX class, I'm hoping that you all made money. I mean, everybody should have made money in what we talked about. All right, we talked about the volatility explosion. This was the arrow here is when we had the class. We said buy long call option strategies on the VIX. All right, literally where the arrow is where we had that over that weekend. We had the class. We were 2 days from the low. Now we had there was a holiday on Monday, but the low was Wednesday, and you see what's happened here. We've had that volatility explosion, the upside. So for all of you who took that strategy, everybody should have made money on it, no exceptions. I mean, a lot of money, hopefully. Now, I also recommended during that webinar that you look at buying put option strategies for the stock indices, because we talked about the bearish setup, the bearish chart formation. And if you had done that, you should have made a lot of money on the downside of that as well. So so this should have been a nice trade from this standpoint as well. In the stock market, you had increasing volatility. You were right on direction. You should have really cashed out on that. So I'm hoping everybody did that. If you say, Mark, well, I wasn't sure what to trade or how to trade that, I would recommend, if you need assistance, Dave Aquino is fabulous. He's a great teacher. He's a great guy. Dave, when I asked Dave his opinion about different types of strategies, he's just a great guy, very patient. He runs our live trading room at valuecharts.com. I would recommend checking it out, because he's a guy, I think, who's a great teacher, great guy, and he can show you a lot of really cool stuff in terms of how to participate. So if you have a question for Dave, like, hey, Dave, I took that volatility, the VIX option explosion class, and I'm looking to buy the VIX calls or buy the puts on the stock indices, he'll tell you, he'll say, okay, we can't give customized advice. We can't tell you how many shares to trade. We can give general advice, but he can give you in general, here's how I would trade it, and he can tell the whole class, here's how I would trade that. But that's why those live trading rooms are so nice, because you can ask questions like that. Dave, in this case, if I'm looking to take advantage of this, what specific options would you recommend? And that's what he's there for. Yep. All right. So what questions do you have? Yeah, Tony, you're right. Tony said Dave is extremely patient and nice trader. He's great. Yeah, this is available on TOS as well, all of these tools, Bob, so that we looked at today. Dave uses TOS in the live trading room, uses TradeStation and TOS. So, yeah, you'll be right at home there. Where can we access your VIX webinar? Yeah, Henry, that was a free webinar. Just go to valuecharts.com and go to our customer service. Just reach out to us, and we'll shoot you a link to that. I believe it's also up on our YouTube channel, the free one, and that was on it's youtube.com/valuecharts with an S. Okay, where did we get the chart with the little red? Yeah, Jim, that is those tools are sold at valuecharts.com. It's called the overlay that I use is called a value bars indicator. That's one of my favorite indicators. And generally, look, folks, I'm not trying. This is not a bait and switch tactic at all. If you can show me a tool that can do what value bars does, then great. There's none out there. The reality is we have the patent on that. So this tool I just turned on here is that is a patented tool. And by the way, you were just asking about the underlying as well here. This is a great case of using the underlying red snapback. Red snapback right here. You have red snapback right here. You have a red snapback right here. Right here, the gap. Again, we want to be cautionary with that. The red snapback right here actually ran up against us a little bit. And this is why when you see something like this take place, you want to make sure you incorporate an element of momentum is there as well. Now this is using a 5-bar, so I would recommend the 35-bar setting, but some people actually like the 5-bar. Thomas Woods is a huge believer in the 5-bar, and some traders actually like the 5-bar and the Bollinger Bands together. So if you want something more reactive with more signals, you can use 5-bar. The 35-bar is much less reactive, so that is something that's going to give you fewer signals, but a little bit more of a long-term perspective. Yeah, Jim, if you go to valuecharts.com, I would, you can check it out. We have our indicator bundles there, and the value bars are, I believe, in the core and the ultimate bundles. Okay, I'm a non-U.S. citizen, Australian. Well, Stu, good to have you here. TOS and TradeStation do not allow, non-U.S. citizens to use their options. Yeah, interesting. Well, good news for you, Stu, is that our goal is to have our own platform at valuecharts.com that's hopefully launching in a couple months here, and my goal is to get options data on that. So, Stu, that's for people like you. That's frustrating, to say the least, with that. Right now, you can use other platforms as well. We make our tools for multi-charts, and if you buy our tools on one platform, we'll give you access to more than one. So if you have NinjaTrader's another really good one as well. We have tools for. You can get your data from anywhere with those, so they don't have restrictions, to my knowledge, on that like TradeStation and TOS might. Okay, is the 35-bar setting, is that 35 minutes? No, Bill, that's actually, the 35-bar setting is 35 bars, and each bar is 5 minutes. So that would be, what is that, 170 minutes? Is that right? So that's more than 35 minutes. If you had this on a 1-minute chart, you could do that. And in fact, that's some of the flexibility we talk about here of having the underlying that's so much more powerful, is having the ability to actually have the 1-minute data and have much better data to use. I'm putting up a 35-bar look-back period in my indicator here. What's interesting here is you have the snapback right here in the 35-bar and Bollinger Band. You also have it up here as well. Now you have kind of a failed version up here as well. Notice how we have early on we have this condition, but this is a value migration. So this is actually, if you get stopped out once, I don't recommend you keep on trying it, because you could be in a situation where you're seeing a very powerful up move or a migration. We're interested in situations where we might just catch that extreme and that prices will snap back to fair value. That's what the idea behind the strategy is. Okay, can the value charts indicators be used in Thinkorswim? Yeah, absolutely, Jamie. That we create those we have developed those for TOS, our Thinkorswim platform. This is what I was told in any case. Okay, you cannot trade futures and Forex on TOS as a resident. Richard, you may be right about that. I know a lot of companies are actually moving offshore with Forex, at least. So Options Express, let's see, Maurice, we actually, a lot of these other platforms like Options Express, to my knowledge, I'm not sure they even allow outside developers to develop, but that's why we're building our own platform. We have run into so many walls as a developer with platforms out there that don't have a way for us to integrate our tools on there. So you can't find value charts on Schwab or Options Express. That's why we're creating our own platform. So if you're a Schwab or a Fidelity or Options Express user, then you can use our platform in conjunction with your platform. It gives you really the tools you need. All right, I have both platforms. Can I use indicators? Yeah, Gary, let us know. Get in touch with customer service. As Mark said, that I can access both platforms, and we'll get you the tools. If you bought them on one platform, we will get it for you in more than one. But again, this is an honor system here. I would ask any of you, if you take advantage of that, please use it for your platforms only. Just obviously, if that's abused over time, we may have to reconsider. Okay, Oanda platform. Okay, I trade Forex in Oanda. Can I use value charts? That is actually something, that's the reason why we're building our own platform. We're going to have a Forex version of it out pretty soon. So you will be able to trade with your broker there pretty soon. We're actually planning on having an API to send traders that trades to Oanda and FXCM and some of the other firms as well. So, okay, let's see here. Okay, not even NinjaTrader. Yeah, NinjaTrader has it. Oh, okay. Okay, what you're saying, Tom, with NinjaTrader, there's compliance issues with Forex. I don't know about that. It's a good question. Trade Navigator, we haven't developed our tools in Trade Navigator. Okay, you can't use them with Ninja. I'm pretty sure you can get around all that stuff with Ninja because I don't think they monitor that stuff. Okay, is your platform also connected to the broker? Yes, Fred, we're planning on having it be a charting and eventually a trade routing platform, but there's a lot of brokers who are asking for an API connection, but that's the goal there. How soon? I'm hoping to have a beta out by the end of the first quarter. And I've got to tell you, I'm so excited about it. This is something we worked on for 3 years, and we want a platform that we can build, design, and really anything and everything we can imagine. The tools that are on it are going to be extremely cool. It'll be very inexpensive on a monthly basis to access. Let's see, new to weekly options. Any suggestions on where to learn? Yeah, Danny, this is what I'd recommend. Good question. Let me, you're kind of phasing into this next area. We are actually, if you're new to options, Dave and I are putting on a class this Wednesday. All right, now this is not only a workshop, it's weekly power trading options with live trading. It's going to be a 2 days of live trading. And not only that, Dave's adding a 3rd day of live trading. Okay, so you're going to see not only us teach all the content that you're going to want, I think, to get you started. And if you're a seasoned option traders, I can pretty much promise you we're going to show you some content that you don't know. All right, that it's totally worth $299. We are only asking $97 for it. So, in my opinion, again, we're trying to keep our webinar prices down. But if you're a member at ValueCharts.com, you have access to options anyways. If you're not, we'll give you 2 days plus the following Tuesday afternoon when Dave puts on a special strategy that he uses for weeklies. You should have enough content after this class to get you up and going. All right, and you're going to have the ability to see us use this stuff in real trading with live trading rooms in the options. So I would highly recommend you do that. Check it out. We will be, now in fairness, we will be using a lot of tools that we do teach from, not all of them. We're going to be teaching both from common tools that are on common platforms, so you don't have to buy our stuff with those. We are going to teach also using a lot of the value charts tools as well. And you're going to see, if nothing else, even if you never buy these tools, you need to know that they're out there because they offer capabilities that other tools don't. I mean, that's just the reality. We have the only tool on the planet right now that actually can show you the degree that a market is overvalued or undervalued, quantify that. All right, so that you just can't. It's patented. So that's until somebody overseas rips it off and starts mass producing it. We have a lock on that. So I would, but we're going to be showing you a lot of things you can benefit from that, even if you just have standard tools. So you don't have to necessarily buy our tools. With this, this is not a bait and switch. This is not a ploy to get you to buy our tools at all. Okay. I think that after you go through this, I believe you're going to look at our tools and say, I want to get these. But go to valuecharts.com/week and make sure you spell week, W-E-E-K, if you're interested. $97. Here's what's in it. Profit, explosion, potential at expiration. We're going to go over more strategies. We're going to show you some live trading room stuff, tricks during the week of when to look for, when to put on some of these strategies, how to manage time decay, how to leverage swing trading, debit spreads, a full review of the Greeks, Tuesday weekly special trade that Dave's going to do. I'm going to show you the up thrust and the spring setups. These are great setups, especially when you combine these with the value snapback strategies. Dave and I are going to teach this together. Again, that starts on this next Wednesday. It is recorded, so if you can't make it, you want to make sure that you at least try to. You will be able to make the recording at your leisure, so there won't be a problem there. For all of you who went to our last week's paid webinar and you didn't have access, I apologize for you. That's actually not a problem on our side. That's an issue on AOL and Comcast side. We believe we have a workaround now, so you'll receive your links that you need for those. Those will be available. We're going to shoot those out via different emails, so check your emails if you haven't received any link. Contact us at customer service by Wednesday on the very latest business day. Let us know. We'll make sure you have your link there. Okay, how could I apply it to my chart when I don't have value charts proprietary indicator? You have to get it. I mean, that's one thing. But we're going to teach you other things as well. So you'll have a lot of strategies. You can get a lot of knowledge that are not related specifically to value charts. But at the end of the day, if you feel like you want to use the value charts type strategies, then you want to check out the bundles, and those are at valuecharts.com. Just go and check those out. Again, but go to valuecharts.com/WEEK if you want to join Dave and I on Wednesday. I think you're going to like this. I'm going to show you some new things that I haven't shown before, some new strategies. I've been doing a new study that's really, really interesting on timing. It's all about timing. So Yeah, so if you can make it for, I mean, heck, $100, are you kidding me? Most of us pay more than that in commission in a week. So we're trying to keep the costs down. You save money on this. I think you're really going to like it. ValueCharts.com/week. If you have any questions, call 859-963-3445. Today, I believe we have somebody who's standing by, or contact us next week at ValueCharts.com. Here to help. 2.5 and 2.6. Yeah, the live trading is on 2.5 to 2.6. Let me go back to that. Let's see here. Yes, the 5th and the 6th. If you can't make those, if for some reason you can't make the 5th and the 6th, let us know, and we'll try to work with you and get you in some other days where you can make it. All right, fair enough? Okay, so let me answer some of my questions. Great session. Wish I had found you people years ago. Okay, Henry, well, thank you very much. It's very nice of you to say that. The live trading room is available for non-members. Yes, it will be, Robert. For this, if you sign up for this workshop for $97, you're going to be able to have 2 days plus a special session on the following Tuesday for the options live trading room. So you will have that available, and then you can kick the tires and see, hey, do I like this, do I not? Okay, Mark, okay, just asked you to consider Thomas and Dave's rooms are very selected number of your indicators. Can you sell a small set? Yeah, Tony, shoot out, give us a call. If you're a member at ValueCharts.com, we do offer discounts on our indicators as well. So give us a call. We're here to help, and we'll go from there. Okay, live trading is available to non-members. Yeah, okay, is the class, this is a, I'm sorry, 6 p.m., this is 6 to 9 p.m. That should be, yeah, 6 p.m. on the 5th. Well, the class 6 to 9 p.m. Eastern Standard Time. That's New York time. It will be recorded. So if you can't make it, don't worry about it. We'll get your recording out very, very quickly. I'm going to try to have it out before, really almost early morning the next day, so you can see the content and see what we're doing in live trading. What are your thoughts on Trade King? Yeah, we know the folks at Trade King. I think they're good. So haven't had any issues. I think they also merged with what was the company out of California recently, but I like both of them, so I don't have a problem whatsoever. We're actually planning on integrating and routing orders to their platform in the future. I have the Ultimate Bundle. Do you have info? Yeah, you bring up a great point. If you have purchased our indicators, we are going to have special sessions starting next week to show you how to use them. All right, show you how to set them up and everything. So these will be for anybody who's purchased indicators, and come on and join us, and we'll show you the tricks that you use for them. Yeah, Zecco. Thank you, Henry. Merged with Zecco. Trade King did. But we're going to show you how to use it. We're here to help you, okay? How is it live trading is after hours? Live trading is not. I'm sorry. You are asking about live trading. Live trading hours for the options are not 6 to 9 p.m. That's when the workshop is. Live trading for the following 2 days, that is going to be from, that's 9 a.m. to 1 p.m. Eastern Standard Time. Okay, right here. So the live trading is, live trading for the following days, the 6th and the 7th, that is, we don't have the times there. Let me see where those have gone to. That is from 9 a.m. to 1 p.m. on the Thursday and Friday following Eastern Standard Time. And then Dave's special session, where he has a trade once a week, is like Tuesday afternoon the following. So, and you'll get links, and we'll have a resource page that has all of this information. Okay, please show how to set up an options chart to the standard chart Apple. The options chart, now if you're on TradeStation and you want to access the option charts, go to Format, go to Symbol, and then go to Lookup. Right here, click Options, and then type in your symbol. So AAPL, and then press Enter. And it's going to show you a lot of the call and put options that are very close to being at the money. All right, and you can see the format they use here. So they use a 4-letter symbol, space, the year 2014. They just put a 14 there. The month is 02. The expiration day is 07, next Friday. C for call. 495 is the strike price. Once you learn, a little bit of the convention on how they type that in, then you can type those in. But these conventions are available for TOS or for TradeStation, and you can see how that's done. Okay, do you take position daily in your chat room? Yes, we do. We show you trade signals. Dave does trade his IRA account, so I don't know. I know I've asked Dave to point out all of the strong signals he can find. Now, I know for a fact that he points out more signals than he actually can take in his account, but I know that he does trade his IRA account. I don't know if that answers your questions. One thing I did not want Dave Aquino to do, and he'll agree with this, is he doesn't want to just sit back and take whatever trades he does. If he brings up a trade that's outside of his live trading account, it's still a trade that he thinks is worth taking. But he may, for whatever reason, have his own trade rules that limits him to maybe 3 active positions at a time or whatever. So I've asked Dave to point out everything he can, and in order to help folks in the live trading room. All right, so Mark, what do you know about? Okay, is that Interactive Brokers, Larry? Is that what you're asking about? I'm a member and have a lot Ultimate Bundle. Okay, yes, Scott, this is really a discounted price as well. Scott, you're going to have access to a couple of member-only webinars coming up that are really, really cool. One of them is the What Works webinar. This is really cool. This is where all the traders get together and you hear us all talking about the best setups, the best strategies that are actually working in the markets. That's coming up once a month. We also have special member-only webinars beyond that as well. And we usually actually don't even charge for those. So you get those. These other webinars are discounted for everybody, but those are, the 97 is for a price for members and non-members. Okay, how do you add option charts to the standard chart of TOS? If you have a question on that, I would recommend, if you can't join us on this this workshop, I would recommend that you, again, go to valuecharts.com/week, come out and we'll show you how to do that. Dave is, again, he's going to walk you through that. I don't have TOS on this computer. I have had an account with TOS. I haven't traded in a while because I'm in development, but Dave can walk you through that, and he can answer your questions, whatever you need. This workshop is designed to help new traders, and seasoned traders alike. Seasoned traders, we're going to show you some cool setups, cool trade managements. For new traders, you're going to learn kind of ground up, get you started information for how to trade, and then you're going to see it applied in live trading room setting. When is the next? Okay. What is the next What Works webinar? Richard, I think that's going to be probably in the second week of February. So that'll be broadcast. You will receive an email on that. That's going to be in the member section. Should be on the home page there. You will receive an announcement, and our live trading room managers are also going to announce that as well. Okay, what will 2 live trading room days of the workshop be recorded as well? Malcolm, you know what? Let me see if I can do that. I will ask and see if Dave would be willing to record those as well. We typically don't do that because it's 4 hours and it's just monster recording files. We did that for a while, and after a while, we just felt like most people who were interested in looking at those were in the live trading rooms. I can ask to see if that's possible. Fair enough. Larry, you asked, okay, Interactive Broker. Larry, I don't know a lot about them. I hear good things about them. We want to check with our new platform to see if we can route trades to them. In terms of their actual capabilities, I think that they allow people to route trades to them, but I don't know if in terms of their own trading charts and platform capabilities they have, and I have to claim ignorance on that, so I apologize. Is there a way to test your indicator before buying it? We used to have that, and it's a good question. We do not have that anymore in terms of a trial, and we found that some people going through the trial were actually companies trying to steal our technology, so I apologize. We just made the decision we just sell it. We do have promotions. If you're a member of valuecharts.com, we can get you a discount. Yeah, in a perfect world, I'd love to have a trial with those indicators. We tried it out for a couple months, and we ran into problems with that. Okay, IB charts are not good. Yeah, Jim, that's kind of what I'm saying. If that's why you're going to like our new platform. Our new platform is going to be awesome. I'm just telling you. There's things that I have never shown anybody, tools that are going to be rolling out in the new platform that are brand new to the trading world. And there's going to be the most innovative capabilities as well. Okay, what is the extra $7 Platinum membership offer? We are going to offer that with this weekly seminar. So at the end of it, if you are not a member, you will have the option to kick the tires for a $7 trial. And that's only something we offer everybody once. So once you've had the $7 trial, you get to try that. You get to also qualify for the charter price of $97, which is still half price off the normal membership price. I think $97 is a steal. We have a number of people who paid hundreds of dollars last year for the trade alerts, live trading rooms, and everything else. Now it's $97, so I think you're going to like it. I'm a member of the live trading room with Dave. Can we implement some of the red snapback? Yeah, Pete. Let me talk to Dave and tell him to start looking for those. Yeah. In fact, we're going to do some note comparing on this workshop this week. You're going to hear Dave and I talk about our favorite setups. And I'm going to probably show my top 3. He'll show his top 3. And I'm going to ask Dave to start looking for my top 3 as well in the live trading room. So, and we'll include the red snapback in that. And also, you're going to like the other ones that we're talking about as well, which are really interesting. The research on the upthrust and the spring, those are interesting setups, especially when you consider objective value tools and momentum. Okay, will the tools be part of the new platform? Yes, they will. If you purchase the tools before, you're going to have free access to the platform, so you don't have to rebuy those. They will be on there, and they'll be better looking too. Does everybody want to see just a glimpse of what the new platform will look like? This is not the new platform, but I can show you kind of a glimpse of some of the cool looks and feels. Now, let me throw this up here. Give me 2 seconds. Some of you might have seen this before. This is the type of cool stuff that I'm talking about, all right, where I don't have any limitations, not to knock anything else there. I mean, TradeStation and NinjaTrader we believe, are very good platforms, TOS as well. They have to have their limitations, but when we have no limitations in what we can design much cooler stuff, and that's what I'm going to show you here. Give me 2 seconds and pull it up. Okay. All right. You know what? I apologize for those of you who are expecting an hour webinar. We always go over, but hopefully it's been worth it. All right. Just 1 second here. Let me show you. This is an example of some of the cool graphics we're going to have on our new platform. All right, so this is what we call the Master Value Charts window. Now, this is development. This is a development time, but I can look at this right now, looking at the Euro-US dollar daily. I see that it's significantly undervalued, trading in the -9 value charts valuation range. It trades below that 7% of the time historically. I mean, the power of this information that's available is extremely helpful. I also know, if you've studied your Euro charts, by the way, that we're on. I don't know if we broke down through it, but we were on a major support level as well. But these types of tools and all these, you can see a lot of these other cool tools over here. These are all designed to give kind of a cooler experience here in the trading with trading tools. This is another tool right here we call Value Signals, and it allows you to have a value-based entry, and then it'll show you a profit bars window over here, and then it shows you several different exit potentials. You've got a value target, and then you also have parabolic SAR exit as well. So there's some really, really cool stuff coming down the pike, and I think you're really going to like it. So just to give, I wasn't planning on going over that, but that gives you a little bit of a glimpse. All right. Let's see. Will the platform be built into strategies and alerts auto execution? Yeah, Todd, we're working on that. Some really cool auto execution tools, stuff you've never seen before. And the thing that let me just say that makes Microquant different. If you look across the industry, all right, Microquant, the people here, I'm not only a trader. I'm the guy who dropped out of engineering school to move up to be a runner on the floor of the Chicago Board of Trade. So if you ever wonder how crazy I am about trading, now I went back to finish my degree, okay, and so I did graduate, but I did, when I was in college, my friends were out, they were out playing horseshoe. I was working for a hedge fund trying to develop quantitative models. So I'm a huge trading nerd. I love trading, have for all my life, and this platform is the culmination of 20 years and all those wish list items. So yes, you can trade futures on this. We're planning everything. Now, be patient with us as we integrate everything, because it takes time to integrate it. Okay, it doesn't seem to work. Okay, did you try for those of you, if you tried valuecharts.com/week, spelled W-E-E-K, try that, John, or let's see, Michael. I'm not sure what you're looking for. Try the week there. Here, let me show you here on the on this what you should be able to find when you log on here. Sorry here. So if you go to for this webinar this week, go to www.valuecharts and then add W-E-E-K on the end if that's what you're looking for, and then you should, if you press add to cart, you should be taken to the sign up page here. That should all be accessible. If you're looking just for our website, Value Charts, this will take you. It does work. And by the way, if you're not on our mailing list, definitely get on the email list. That's when we're going to keep people posted about the announcements for the new platform. Scroll down to the bottom here. Notice in the lower left-hand corner, we do have customer service, support at valuecharts.com, and the telephone number as well. And then descriptions of everything else. If you're a member, then you want to get to your membership area up here in the upper right-hand corner and type in your username and password. But for those of you who are not members, I'll just show you really quickly what that is. This is a brand new area we just finished launching about 2 weeks ago. Really, really cool stuff in here, including trade alerts. Most educators do not have this technology. HubertCenters.com is the only one that has this right now, and more may have it in the future. But you have live trading rooms right here. You have 2 to choose from. You have daily videos, daily video newsletters that come out. You have the trade alerts. For those of you who have not seen that, that's a really cool tool. You can go and log into Signal Feed. That's our technology as well. And then you can receive trade alerts real time within markets you want to track. So if you're a stock trader or an options trader, Dave broadcasts these, and he's telling you, hey, this could be a QQQ buy signal. And then he could make recommendations on what options to buy as well. So this is pretty cool stuff here. And then going back to the membership, you have live analysis strategy sessions every Monday night. Again, this is a great time to plan out the week, hear how we analyze the markets. Monthly newsletter as well. You have full access to. You have access to a library of trading videos. So if you haven't seen that, that's kind of a cool deal as well. If you're interested in learning more about value charts, the videos will pop up. And let's say for whatever reason I think my Firefox is hanging up there, but that's a whole video library, and then etc. So it's a bundle of products all designed to help you trade the markets better. We're all traders. There's nobody who teaches and educates at ValueCharts.com who is not a trader. All right, we don't believe in educators only. If you're an educator and you're teaching people how to trade, you better darn well be a trader too, because it's a heck of a lot harder than what it looks like on paper. All right, could you paste a link? Yes, let me do that. That's actually a really good idea. I should have done that earlier. Let me paste the link here. valuecharts.com. Okay, WEEK. I'm going to paste this for everybody to see. Copy. Okay, all right. So here's the link for the workshop. Check it out. Let me get back to what we were talking about before. So again, if you have any questions, call our telephone number there as well. Let me get to questions. These questions have been really pouring in here, and I apologize for not getting to them faster. Okay, could you paste the link? Just did that. Okay, put the link up again. Yeah, the link right here at the bottom. Can you see it? www.valuecharts.com/week. Okay, do you have any association with Metastock? Yes, I do, Mary. We are good friends with Jeff Gibby, and we are working to develop some indicators. We have developed actually a bundle of indicators for Metastock relating to candlestick charting. Unfortunately, Metastock lies in the same camp as a lot of other platforms. No fault of theirs whatsoever, but they have to have imposed limitations on tools, and we're not able to build the value charts tools on Metastock because of the limitations on their GUI. But at some point, we will have our platform out there as well, and maybe if Metastock, with their new generation, if they have the capabilities, we'll try to do that. So we like Metastock guys. They're great guys. And Metastock, actually, Mary, you might laugh at this, was one of my first platforms I used back in the 80s. Okay, Larry, the link you just tried, the valuecharts.com, you're saying that doesn't work. Larry, can you go to just valuecharts.com? Can you type that in? If you type into Google, type value charts, and then click on that. Here, I'll show you how to get there if you can't get the link to work. Just go to Value Charts, www.valuecharts.com. You should be able to get to this page. If you can get here, just go to the live online workshops and click on that, and then you'll see this right here, this weekly power option strategy, and then you can click Learn More. So just go. That's how you get there from the home page. If you're for some reason that the link doesn't work, the link should work though. I think we've had a number of people sign up already. Okay, with the platform, have a scoreboard showing current prices. Quick glance at. You know what, Todd? You bring up an excellent point. That's insightful, and the answer is yes. Very cool stuff coming out. I can't describe everything, but I'll show you here in hopefully about 8 to 10 weeks at the most. Okay, could you paste the link? Okay, you should. Let me paste the value charts link up here again. Hopefully this should work. Just 1 second here. Let me try it again here. Okay, try that. It's valuecharts.com. Again, from the home page, just click on Live Online Workshops, or just add /week to the end of this, and that will get you to the sign up. If you have any problems, just go to our homepage here and call on Monday and say, hey, I wasn't able to sign up for this. And again, our email and contact information is right here, or you can call this number right now, 859-963-3445. Somebody will help you. Greg, you good? It works for you? Good? Okay, which options markets will you be trading at 6 p.m.? No, there's no trading. The 6 p.m. is the course itself. Live trading is the following day at 9 a.m. to 1 p.m. So the course itself, the workshop is Wednesday at 6 to 9 p.m. at New York time, Eastern Standard Time, and then that will be recorded, and the live trading sessions are the following days, 9 a.m. to 1 p.m. I'm going to see if we can record those. I can't make any promises, but I'll try to do that. And then that will be Thursday and Friday, and then we'll have a following special session the following week. Okay, let's see here. Have you ever checked Profit Source platform for Advanced Get platform? They have ideas. If incorporated in your software, that would be extra awesome. No, that's interesting. I have not. I might have without recognizing that, but we definitely try to keep our ear to the ground. And you know, at the end of the day, we're traders ourselves. We want the best tools for us, all of us, and so that's what this platform is all about. Let's see here, and then let's see any more questions. Let's see, after signing up. Okay, could you? Okay, after signing up for the offer $7 Platinum membership, would like to wait for a seminar to choose to start that. The offer will be left, or the offer will be available next week for the membership special. Okay, week works for me. Okay, good. Yeah, most people, I think the options class work for you. All right. Well, listen, I don't want to go too far over for these Saturday sessions. Hopefully, this is helpful. What we talked about. But the bottom line is, if you're trading weeklies, do your homework. Please be careful with that. And you know, in terms of understanding, especially the slippage spikes, you do not want to get caught on those. There is tremendous profit opportunity. And remember, with trading, it's a game of probability. It's not everything we've talked about. It's not a guarantee that any strategy or setup is going to work. What we're after is we want either a higher win-loss ratio, or we want a higher probability of wins. Those are the two things you got to watch for. Work on money management too. I highly recommend that you really use disciplined money management tools. When I talk to the best traders in the world, a lot of them, I mean, money management in many ways is a make or break for them, for everybody. So you don't want to risk, you know, $1,000 in one trade, have that to be a loser, and then risk, you know, 250 in the next, and have that be a winner. You want to be consistent with your risk. Okay, I am going to sign off here. And appreciate that. Okay, is your webinar different from Dave's last webinar? Yeah, this is going to be different, Fred. This is going to be more content and different things. There probably will be a little bit of a review for those people like the Greeks, but there's going to be different content. I'm going to be a part of that, and I will be there to introduce my setups as well. So, okay, will developers be able to add, yes, add-ons, Tom? Yes, for our platform, absolutely. Our goal is to have the ability for you to add on any indicators and strategies to the marketplace as well. So cool stuff happening there. Okay, have you ever incorporated Hubert's squeeze indicator with value charts? You know what? It's interesting, Brad. There are some really cool setups with that, with value charts and squeeze combined together that are very viable. So we need to have a webinar on that at some point. But the squeeze indicator can be used to identify some good setups. Okay, if I cannot attend on February 5th, yeah, there will be a recording, Fred or Mike. I'm sorry, but okay, if I cannot attend on February 5th, will there be a link? There will be a link. We'll make sure that you get a link to the live trading rooms as well. As always, if you have any questions, just reach out to us at valuecharts.com. Again, right here at the bottom, support at valuecharts.com during business hours in New York time, and we'll get you set up. We're usually there pretty early on weekdays, but I think our official office hours are 9, but we will get you set up and get you access. So Dave used the squeeze. Yeah, the squeeze is a very valid indicator. So it's for different types of setups. So yeah, James, thank you for the compliment. I appreciate it. I didn't manage to find the sign-up page. Okay, Angela, if you go to, again, sorry to skip around here. Angela, go to valuecharts.com/week again here, and you should be able to find the sign-up page. So either go to the home page. There's two ways to get there. You can go to valuecharts.com homepage and click right here under Education, click Live Online Workshops, and this will take you right here to this page. You can get more information, sign up that way. Or if you want the quick route, quick and dirty, just go to valuecharts.com, type in your address bar at the top, and then type in W EEK, and that will get you the same page. So you'll 2 ways to get there. Thank you. Yeah, consider squeeze setups, Henry. We will do that. That's kind of a cool indicator. I use that for. I can use a squeeze type. I have it's kind of a squeeze version myself that does something very similar. Hubert and I were actually talking about something that was, possibly even a filtered squeeze concept as well. We're always looking for new and different ways to trade the markets. Thank you, folks. Appreciate that for coming today. I think we've answered most questions. Again, if you ever have any problems whatsoever or questions or if there's anything we can help you with, we're available Monday through Friday, Eastern Standard Time, and we will work our hardest to get back to you in a timely fashion. Everybody have a great weekend, and I hope to see you at the, Andrew, thank you, and Angela, thank you. Hope to see you at the options workshop this week. I think it's well worth the investment. So are the indicators included? No, the indicators are separate. The indicators are separate. We will discuss them. You can make the determination as to whether you want to use them. But what I'd recommend, Sam, I'm going to tell you a cheat here. If you come to the options seminar, you're going to have a $7 promotional membership price. Get in that, and then you get a nice discount on the indicators. If you've already purchased the indicators and you're a member and you didn't get that discount, give us a call. We'll take care of you. All right. Everybody, thank you thank you, Mike and Todd. Appreciate that. Sheila, thank you. Leroy, thank you. And Rajesh, appreciate it. Have a great weekend. Okay, could I have your email address so I could send you any questions? Yeah, Angela, this is the best way to get in touch with us is go to valuecharts.com. From my email address, I literally, one of the challenges I have is that I actually have so many emails coming in every day that sometimes I miss it for a guaranteed response. And these oftentimes are forwarded to me as well. support@valuecharts.com. Shoot us an email there, and our customer service will take care of you, and or they'll send it to me if I need to respond to something. James, thank you very much. Han, thank you very much. Stu, appreciate that. All right, well, folks, great presentation time this weekend with you. In terms of, I think we covered a lot of ground here, and looking forward to Wednesday for all of you who signed up for that. That'll be a great strategy session. Live trading, we'll bring all these points home, and looking forward to seeing you all this Wednesday at 6 to 9 Eastern, and then live trading on Thursday and Friday at 9 to 1. All right, folks, have a great weekend, and I'm going to go ahead and check out here. Thanks.